Hello fellow traders. Something pretty interesting happened today in the S&P market and markets in general. Before I get to that, in this video, I've taken you back to October 22nd, right here. And I want to call your attention to two things on my chart. This is a 3-minute chart of the S&P E-mini. And the two things that I want to call your attention to are the Taylor trading zone and this horizontal black line, which represents the previous day's close. And I want to call to your attention two things, and I want to take you through several days, in fact a week of trading, and just point out a few things relative to these two issues, the previous day's close and the calculated Taylor trading zone. Now you'll notice that prices just about traversed the trading zone, stayed well within the trading zone for most of the day, October 22nd, and prices did hit the gap. They hit the previous day's close. Let's go forward one day. On October 23rd, prices did not hit the previous day's close, didn't close or didn't remain in the calculated trading zone, although if we transpose the trading zone, we can see that prices traversed the range, and then some, but came back to close it. Let's go forward one more day, and I want to just call your attention to this line, the previous day's close of October 22nd, and that was 58.93. Just remember that number, 58.93, because prices did not close hit the previous day's close. Let's move forward. Prices traded well within the trading zone and hit the previous day's close on October 24th. Let's move forward one day. Prices rose up to 58.93, closed the gap from 2 days earlier. Prices always close the gap, keep that in mind. And then came down, traded within the trading zone, and closed the gap of the previous day. Let's move forward another day. Prices stayed within the trading zone, but did not close the previous day's gap, right here at 58.45. Here on the next day, they did close the gap, and they did actually close the gap from the previous day. On October 30th, prices traversed the trading zone, closed the gap, prices hit the level of the previous day's close. October 31st, what happened October 31st? Prices traded nowhere near the trading zone, traded nowhere near the gap. So what happened on October 31st? This was pretty severe. Now I want to remind you, prices always close the gap. If not the next day, then a couple of days later. So let's look at the big picture. On the S&P, again, this is a 3-minute chart. Prices closed on Wednesday, October 30th, right about here at 58.12, opened at 57.73. Closed even lower. But bear in mind, you see this gap? This will close. Now, what happened on October 30th? What happened on October 30th? And for that, I'm going to take you to the economic calendar. On Thursday, October 30th, what happened? Well, there were some announcements, initial jobless claims. Was that the cause of the big drop on Thursday? No. What was is this, right over here. The employment report, non-farm payrolls, that is due out on Friday, November 1st. And the forecast is 115,000 jobs. The previous jobs report was 223,000. A huge drop in the forecast. But what happens if the report really isn't as bad as the forecast? What happens if prices actually come in at about 200,000 or thereabouts? Don't you think this price is going to bounce up and possibly, very possibly, close the gap from Wednesday? Very possible. Let's go back to our E-mini chart, and here on Thursday, October 31st, Prices traded nowhere near the previous day's close and nowhere near the calculated trading zone. Calculated trading zone is pretty accurate. Big discrepancy in prices because of what? Trader sentiment. Does somebody know something? Were prices taken down to be taken up? My guess is that's exactly what happened. So let's see what happens on Friday, November 1st, if the jobs report comes in much better than the forecast. That's my video for today. Trade safely, use lots of patience. I'm Marv Eisen of Timeless Dollar Trading Academy, and I'll see you in my next video.